But what's different now than in any time I've ever been involved in this is the amount of silver that's being accumulated primarily by China, Russia, and India. India has bought over 900 million ounces over the past 3.5, 4 years. That's more than it is on COMEX and the LBMA combined, totally, including eligible and registered. Those eligible bars on COMEX are not even for delivery. So, Russia just came out and said, we're going to make it part of our global stockpile. I don't remember a government ever saying that. Russia is saying it. And now China's flying all around the world as the second largest producer of silver already on the planet. They're flying all around the world and buying concentrate and doré from miners. Why? Why are they going to such great effort to accumulate this stuff? Why is India buying it like it's going out of style? And I think it's very important to understand that there are very few assets I've ever seen, ever, that have the kind of potential that silver does. Its price is completely detached from reality, and that is largely due to the fact that you have these handful of Western banks that are suppressing it. And again, the big question is why? And I think it has a lot to do with the military industrial complex, which the need for silver and high tech weaponry is off the charts.
China is making an aggressive and unprecedented move in the global silver market. Already the world's second largest silver producer, they've gone further, importing 900 million ounces in just a few years, surpassing the total stockpiles of COMEX and LBMA combined. They're bypassing traditional markets, buying directly from South American miners, while Russia has just declared silver part of its official stockpile. Andy Schectman explains that this is no accident. It's a calculated strategy to weaponize silver, a critical resource for high-tech industries and military applications, potentially to collapse the US economy.
I mean, I guess it just depends on how the whole ecosystem plays out. But as long as central banks are around trying to support their currencies, you will see gold move higher and higher and higher in the face of um, money creation and inflation that is baked into the system. They talk about the Fed striving for 2% inflation. They don't get to 2%. I don't even think in the best of times we've been at 2% over the last 20 years. It's always higher than that. In particular, the metrics that they use to measure inflation are a bunch of nonsense. Also, the numbers are much higher. You can add an 8 to the inflation number they give us because they exclude so many of the things that are inflating: food, energy, and housing. And if things get too expensive, they change them, they replace them. John Williams of Shadow Stats will tell you inflation's 11%, not almost 3. But think about that. Even if it were 2%, take them at face value. Even if it were, that means in 10 years you lose 20% of your purchasing power. The currency is being insidiously inflated away over time. And so, yes, I mean, gold is the tortoise in the race. Look at what it's done since 2000. It's gone 9.9% higher per year on average for the last 25 years, quietly, as the dollar from which we measure our wealth is continually sliding in value. So, yeah, I mean, there may be moments. We live in a very fluid world where things keep changing day by day, where you could see major spikes or corrections. But in general, yes, I mean, gold just keeps marching forward in the face of a currency that keeps losing value day by day, month by month, year by year, through the incessant money creation and inflation that is baked into the system. But in a situation that we have right now, yeah, you're talking far too many potential problems in the system that could trigger that all at once moment where you see gold really, really take off. But I would simply take a step back and say, what are the most powerful people in the world doing? And those are the central banks. They haven't stopped buying gold. In fact, they've doubled down on it. So I wouldn't look at the price. I wouldn't look at the metrics. The price, the inflation, all of these things are manipulated by the Bureau of Labor Statistics and a government who doesn't want people knowing the truth, doesn't want people abandoning the system, doesn't want people holding alternatives to the system. So, yeah, wouldn't surprise me to see a big spike, but I think more realistically, you will see a continued appreciation of gold in a very substantial manner. Look, my mentor told me if you make 7% per year, as Richard Russell, you're a rock star. And gold quietly has averaged 9.9% for almost 30 years without any notice. It's not sexy, it's not attractive, it's not flashy, but it continues to move forward. I don't see any reason that will change. I own miners. I think everyone should own some. I don't pay as close of attention to them as I do the physical metal, just simply to say that they are massively undervalued. They have underperformed the actual bullion um, underneath them. I think that if you took the entire capitalization of every mining share on the planet, it's probably less than that of Coca-Cola. I think there are very few things that offer the asymmetrical risk reward that the mining shares do, meaning lowest downside, highest upside. I think you put it in the form of a pyramid. The mining shares belong in your assets should be in a form of a pyramid, where the base of your pyramid, 60+% should be in things like cash, even though cash is not the best place to be. Let's just put it there for now. Physical precious metals in your possession, paid for real estate, very conservative, low growth, low yield assets. The middle portion of your pyramid, 20% maybe, would be things like short-term treasuries throwing off a 5% yield.
What about
Utility
crypto?
stocks paying a dividend. Um, Things that have a little bit more risk, but throw off some return. And the top 10% would be cryptocurrencies, mining shares, things that are speculative but have massive upside. And the theory that the Swiss have used for over 300 years in developing this ideology is that if you lose everything on the top 10, just get crushed. You make nothing on the middle 20 or 30, as long as the 60 or 70% base of your pyramid is solid, stable, and not moving backwards, then you'll be okay. Of course, in a perfect world, you kill it on the top 10 and you do great on the middle, then the base doesn't matter. And a 10% allocation of assets to of your asset portfolio to mining shares can outperform the entire base below it. And the same thing is true of cryptocurrencies, but they don't belong in the base. You don't invert your pyramid to speculation. So yes, I think there's massive opportunity in the mining shares, which have been beaten down unmercifully. And I think you look at people who are truly successful in investing, that's what they're looking for. Assets that have fallen out of favor, even though the um, the idea behind owning them, the fundamentals really are quite strong. So yeah, I'm a big fan of mining shares, especially in an environment like now where their true value has really been distorted over time. I think it's been ready for $50 for a long time. I think you have um, massive short positions on silver in London and in Comex, but some interesting things happened here recently. When we talk about silver, and again, the Chinese buying all this concentrate, 70+% of almost 80% of all of their industrial applications right now are being that need silver are being fueled by silver concentrate that they're getting directly from the miners in South America, disintermediating the marketplace. It's actually quite genius. And so, but when we talk about silver, let's first talk about the deficit. So 282 million ounce shortfall in 2024, the sixth consecutive year, the largest since 2020. We're well over 1 billion ounces in negative territory over that period of time. But what has me interested is the amount of deliveries in December. On the COMEX, 45.8 million ounces were delivered either physically off of New York Exchange or exchange for physical, where a contract is either transferred to London off of COMEX or to Hong Kong off of COMEX to a Brinks facility, which is indeed a COMEX contract. To me, there are very few things I've ever seen in 35 years of finance that offer what silver offers. And you have massive drawdowns on the LBMA and on COMEX. You have a shortage of supply versus demand to the tune of a 1 billion plus 4-year running shortfall, and an expansion in its uses in military, in green, in digital applications, alongside of its monetary renaissance. So there are very few commodities in the world that have plurality in uses. Usually a commodity is used for like one thing primarily. Like copper is industrial, like gold has some industrial, but it's primarily monetary. Silver, on the other hand, is 100% monetary, but it also has huge implications in green, in digital, in military, in places that are expanding. And at the same time, when you look in London, kind of the crux of the manipulation on COMEX, you have 8 commercial banks short about 100 million ounces right now. They were short about 150 million ounces, but they covered 50 million of those ounces, much of which was just delivered off the exchange. Covering their shorts, people stood for delivery. But in London, it's a different story. In London, those same banks are short um, roughly per year. Let's just go per year. Per year right now, they are shorting in London roughly per day. Let me just back this up for a moment. Per day, they're trading in London 2.9 billion ounces of silver per day on paper contracts. That's 3.5 times annual global mine supply. They're short between totally 4 to 6 billion ounces of silver. It's opaque there. It's not as transparent. It's not an exchange. It's an over-the-counter facility. So there's less rules. There's less transparency. But the numbers would play out to between 4 and 6 billion with a B ounces short. And these banks are trading. They say they trade 290 million ounces a day, final settlement numbers. But those numbers are admittingly 10 times short because they only post the final numbers. So if you're trading 2.9 billion ounces a day, that's almost 4 years worth of global production per day, of which about 95% of those contracts are paper contracts. These are the bullion banks trying to suppress the price. But what's different now than at any time I've ever been involved in this is the amount of silver that's being accumulated primarily by China, Russia, and India. India has bought over 900 million ounces over the past 3.5, 4 years. That's more than it is on COMEX and the LBMA combined, totally, including eligible and registered. Those eligible bars on COMEX are not even for delivery. So, Russia just came out and said, we're going to make it part of our global stockpile. I don't remember a government ever saying that. Russia is saying it. And now China's flying all around the world as the second largest producer of silver already on the planet. They're flying all around the world and buying concentrate and doré from miners. Why? Why are they going to such great effort to accumulate this stuff? Why is India buying it like it's going out of style? And I think it's very important to understand that there are very few assets I've ever seen, ever, that have the kind of potential that silver does. Its price is completely detached from reality, and that is largely due to the fact that you have these handful of Western banks that are suppressing it. And again, the big question is why? And I think it has a lot to do with the military industrial complex, which the need for silver and high-tech weaponry is off the charts.